a lot if you've got a small account now, but trust me, when you have got six-figure accounts, when you've got 2, 3, 4, six-figure accounts, and you're getting 1% a day, 5% a week, that will soon add up. I think we did it the other day, didn't we? That if you've got £100,000 salary as a doctor or someone who's obviously working very hard in that type of role, $100,000 or £100,000 is the usual or average salary. Divide that by 12, divide that by 4. That's, you need to be doing something like 1% a day, 0.5% a day, and you can equal that salary on a funded account. So if you're sitting there thinking, when's this going to happen? How's this going to happen? Just study, and make it happen. The only way this will not work for you guys is if you stop doing it and you give up. Otherwise, this is going to be your golden ticket to wherever you want to go. Now, when we look at the daily time frame, and what I'm going to do, I'm going to get rid of this day. Now, I'm going to zoom in. What I can see right here, okay, is this is yesterday's price action. Now, yesterday's price action was essentially a write-off because when we look at it, there was nothing going on. It was a bank holiday day, 4th of July, America. Really amazing day for the Americans. And, I'm quite jealous they get a day like that. We don't really celebrate that, in England, obviously. But this was nothing happening. So what do we want to see? Well, we know that we got this target up here. Okay. We know that we are overall bullish. We know, we can see it. It doesn't take a genius to work out this is pushing higher. Now, where should price go? Now, there's a couple of areas to be looking for price to go higher. And all you have to do, again, this is where we are now. Look to the left. What can we see? Staring us right in the face. We can see this imbalance here. Now, we actually did this analysis, guys, in the London session. And it's amazing because it all played out perfectly. And we can see this imbalance. I can't really see much imbalance below these two candles mitigated into each other. Yes, we've got an institutional candle right here, which we could potentially come back down to, but I'm not too concerned about that. Just because the situation we've got at the moment is that we don't know when this range is actually going to finish. So it's actually impossible to measure this trading range here, because even though we're not in a 50% market, we don't know if this range is going to carry on moving higher or not, because we've not got any confirmations that this range is finished. So we can't measure the range. We've got to go with what we can see. And, we can mark out the daily candle. We can mark out the imbalance. And then what we start doing from this point on, we think, okay, I'm bullish. What I want to happen on this bullish day today, bear in mind, the open is going to be somewhere here. I would like to see something like this happen. If something like this can happen, then obviously that is how the power of 3 works. On a daily time frame, this is how I'm identifying what I want to happen. But I'm not just going to look in this imbalance and stay on the daily time frame and go straight down to a 1 minute time frame. It's just not the best practice to do. If you sit on the 1 minute time frame for too long, trust me, you're just going to get lost in the sauce, and it can be the worst place for you at any point. So you have to be identifying what is inside this imbalance. So now what we can do is we can inspect this imbalance. We can go a little bit lower and basically wait until we find anything that we like that sits within this imbalance. And as we go down the time frames, there's a few things that we start to notice. So the first thing I can see within this imbalance is this 1 hour candle. So that's the first thing that I'm ready to basically highlight and say, yeah, that's an area we could come down to. And this could work for our power of 3. Price could manipulate, come down there, and then push price higher. But is there any other areas? If we start to possibly redefine these areas, is there any other places we could go to? And all we have to do is keep shopping down the timeframes. And what I can now see when I look at the 30-minute time frame here, I can see all of the liquidity which was created. I can see Monday's low sitting right there. So there's going to be liquidity there. I can see liquidity sitting right there. I can see areas, and this is the manipulation that we want to see. This is what we want to happen. And I can go down a few more time frames until I get to an area where I can see another candle. Now, this 15-minute candle we spoke about in today's New York session. And what I essentially said was there's two areas. I want the first area to come into here. And if we fail this area here, I'm going to be looking in here. If we get anywhere and get any accumulation inside this 15-minute area, I'm going to be bullish. If we get any accumulation in this 1 hour area, I'm going to be bullish. At no point am I thinking I'm bearish. Now, yes, there's an argument to be selling up here down to here. You can do that. Just fully understand it's higher risk. It's higher risk. But these areas, we got trades today. It's just about waiting. You know, you might sit there and on a trading day like this and think, because this was the same point of interest yesterday, but this is all that happened yesterday. Nothing happened. You just because it was the 4th of July in America, a bank holiday, doesn't mean that you're not going to have more days like this where nothing really happens. And yes, price could easily come down here. Now, why would price shoot down lower aggressively? Does anyone know? Why would price possibly do that? And what would cause price to inject itself lower? The news. Stuart, 100% news. Now, we look at news here. We've got 7 p.m. UK time news. We've got all day for everyone, every currency news. We're expecting volatility in the markets. I wasn't too worried about this because volatility, when you see all day news like this doesn't mean the price is just going to go nuts all day. It doesn't mean to sit there and hope for the best. It means that there's going to be volatility at the same times we always get volatility. 7 a.m. UK time, 1:30 UK time, 2:30 UK time, 3 o'clock UK time. Like those are the times, and I've gone over those times before, and I will go over them much more in the future. But that's just going to be expecting more volatility at those times. And this is the thing: if there was news at 1:30 and we were still here, would we be trading? Like even if we were doing this at 1:30, it's not necessarily a trade you'd take right on the stroke of 1:30. You'd wait. You'd sit there and wait. So usually when you see a high impact news event that just forces price down, you're not really going to do any trading anyway, because you're not going to be trading until the news is played out. You're going to give it a minute, and it's not going to provide you with an accumulation to go higher anyway. And if you're sitting there thinking, oh, but I want to sell up here now, or I want to wait for it to move higher and buy, honestly, you could wait for these moves to happen a couple of times a week and they play out. You don't have to trade if you see the market's going crazy. Like this Friday, for example, with NFP, I don't trade those days. They're the days when you might get price kind of disrespected. And, you know, what can we see? We can see this area here. Now we can refine it more. We can go into a 5-minute time frame. And then, you know, we can put it down a little bit lower and things like that. So that's all absolutely fine. But overall, this is what I'm working with. So, you know, when we got to this point here, and, you know, bear in mind, if I just press play, I don't remember we were. This is Asian session still. So if I just press play, we were in the London session when this was playing out, or when we were looking for this anyway. And it actually dropped pretty heavy in London, as you can see here. So this is where we were. Now, we obviously took this liquidity. And this is the thing, manipulation at its finest, because two things can happen here. What did we do? We came into this imbalance. We closed below that liquidity. Price starts rejecting. But we don't get any accumulation. Yes, you might get it on a smaller time frame, perhaps, and you might get something part-time. But as long as you understand, if you're going in on a 1-minute time frame down here, you have to be aiming to get out around that imbalance. Because look at price structure, we are bearish. And, you know, as we can see, price was just respecting this and moving to the downside as time went on. Now, this was around 825. You probably could have taken a sell in there, targeting this area here. But look what happened here. Price actually came into our 15-minute area at 10:35. I was in the gym at 10:35. I was not trading. I didn't have any alarms. I didn't do anything. I wasn't bothered what was going to happen because it wasn't my trading window. If the move had have played out, the move would have played out. But what it is doing is quite interesting. It's creating this structure, and it's just kind of playing around. So, you know, again, I'm not even looking at the charts at this point. I'm probably at home having lunch at this point here. I'm getting into the charts to actually have a look about this time here. This is when I'm really looking at the charts. So everything that's going on here at the moment is fine. And then look what happens. We get a push down, we take another low. So in this area here, we've taken another low. And this is the thing, guys. If you're on the 1 minute time frame in here and you can see it happen, again, there's nothing necessarily wrong with that. But get involved, get out of the market around here. Get out of the market around here. Just take a short-term thing. What we want to be waiting for is something to play out in our favor. And what can we see that's actually happened at here now? So it's got to 2 o'clock. I'm on the charts. I'm looking. We're inside our imbalance. What can we see that's actually started to happen? We can actually see these areas play out now. Now, what I like about this area, and this is something I think everyone here should be adopting, is we have got this break here on the 15-minute. Price is pushed higher. And then what we are looking for is we are looking to identify certain areas. Now, that's already the move there. There's no, yes, we've created that imbalance at 2:15. We aren't really, you can see we obviously haven't come into the area there because this is obviously the benefit of hindsight now. We know how this move played out. But if you don't see any imbalance or you want to identify this structure here, all you have to do, you don't have to go to a 1 minute time frame, because if you straight away look at a 1 minute time frame, there's nothing really to enter off of in here. Okay, there's nothing to enter off of in here at all that really takes my fancy. And if you're looking for price to come back, you think, which imbalance do I go on to? Start on a 5 minute time frame, and let me just get rid of this. Okay, start on a 5 minute time frame. If you see the big push up, start going down a couple of time frames. Go down to a 3 minute, go down to a 2 minute, go down to a 1 minute, and just have a look for yourself. Now, the setup that was played was in here, and this is the imbalance right here, and this is the exact one I played here. So big push up, imbalance. We had this order block or move pushing down. We had liquidity grabbed here. We had more liquidity being grabbed here. Price expands to the upside. This here, there's nothing wrong with buying in this area here. My stop was a little bit more aggressive than it usually, or it has been lately anyway. And in terms of targets, you've got loads. You've got this liquidity up here. That's a 5-to-1. You've got that liquidity up there. That's a 10-to-1. And then all we're waiting for is for price to move. And what we can see happened is that price started pushing to the upside there. That, and I didn't even have to go to a smaller time frame. You could have done it on a 2 minute chart. I very much doubt many people would have sniped straight off the 1 minute here. And if they did, maybe the stop would have been low there. That's fine. But I've started on a 5 minute. I've got accumulation on my 5 minute, and I'm scanning down the time frames looking for the best setup. That is what I want to see happen. I don't have to go any lower. I can see it on the 3 minute here. And that's it. It's done. And now when we look at what is happening, why have we identified this area? Because when we look at where the daily candle opened, which I'm going to talk to you about in a second, it happened and it manipulated its way down. It broke structure at a certain time. It broke structure after 1:30 UK time, which is 8:30 New York time. Very, very, very powerful time of day. This runs on New York-based algorithms. So this is 8:30 in the morning. This is New York session, by the way, not London session. So this here is when the institutions, the banks, the city level traders, all these rich guys that are trading with all the volume in the market, the algorithm in terms of the candles and what's printed, at 1:30, you can expect to see a move after that time. At 1:30, look to the left. Firstly, we know this line here resembles that 15-minute area. We know this shaded area here that we're actually involved in now is our daily imbalance. And we know that price is broken higher at this area here. That's not happening for no reason. This was before 2:30, which is 9:30 US time, or New York time. So a little bit risky in the sense that we could have had a little bit more manipulation coming lower. But when I saw this, I just took it. And sometimes you just have to trust what you see in front of you. It was not happening by coincidence.